And I think what's interesting right away is that even within this world of emerging markets debt, there are different paths you can take.
Right.
You sent over a bunch of material on the different indices out there, and they're not all created equal. You've got those market cap weighted ones where basically the countries with the biggest amount of debt outstanding have the biggest say, the most influence. And then you have these diversified or capped indices, which try to put some limits, put a ceiling on how much any one country can dominate the index.
And it seems like that choice of index could make a pretty big difference. It's not just some small tweak to how your portfolio is set up. You pointed out that the difference in market cap between, say, that JPM, GBI, EM broad index and the diversified version is huge, over 50%. I mean, that's a massive difference in how you're positioned.
Yeah, absolutely. I think it shows that when we say emerging markets debt, we're not talking about just one thing, right? There's a lot of variety under the hood. And how you choose to track this asset class, how you slice and dice it can have a really big impact on your risk and return. One thing that really stands out from the material you sent is the growth of the local currency government bond market. That's a story in itself.
It is. I mean, it went from something like $100 billion in 2002 to $5 trillion by 2023. $5 trillion. I mean, that has to mean something, right? And one of the things you sent over talk about this concept of original sin. Can you explain what that means?
Yeah, sure. I think of it this way, historically, a lot of developing countries, they just couldn't borrow money long term in their own currency. They were forced to issue debt in stronger currencies, usually US dollars. So that's the original sin. They were stuck. But this massive growth in local currency markets, it shows that things are changing. A lot of these bigger emerging economies, now they have the credibility. They can issue debt in their own currency. Now, for you, the listener, what this means is it can really change the risk and return in this asset class, right? As these countries become less reliant on those external US dollar loans.
Right. It's like a sign of growing financial independence.